So speaking of the regulatory environment, there's a lot of insiders who are predicting possible changes in the housing industry, particularly rising prices or even decline in prices based on the interest rates rising and some other economic factors and a possible recession. What are your all's thoughts on what to look for in 2023 as far as the housing industry and any effect that might have on foreclosures or an increase in defaults?
I mean, I think it's definitely foreseeable to see a rise in defaults just simply knowing what's going on in the economy and inflation. But something that's kind of interesting, flip side of the coin, is properties have still maintained a lot of value. We haven't really seen, although there's been some steadying, that decrease, that maybe have happened in prior recessions. And because of that, we are seeing on the litigation side some alternative forms of resolution that maybe wouldn't have been there in prior, large default years, like reinstatements or sales that aren't even necessarily short sales. And because of that, I think that's another reason that just keeping foreclosure counsel in the loop throughout the whole process allows us to make sure that we're getting the best resolution for the underlying investor, and also that resolution, however it may come, doesn't create more litigation issues if not handled appropriately.
And especially now that there's a lot of equity in homes, that certainly changes the way that we litigate, even how we go to sale in the foreclosures. But outside of the equity issues, assuming that equity stays, if the interest rates do continue to rise and the values go down ultimately, and there is some equity positions, those who locked in their rates, particularly in 2022, although they have low interest rates, they are possibly at risk of losing equity or going underwater very quickly. How could that possibly affect foreclosure rates or even possible defaults?
Well, I certainly don't think that if we were to see an increase in defaults the way that we did during the Great Recession, it's not going to be the same, but I think that there will be a lot of similarities. I mean, I think between the three of us, we have over 30 years doing this in the industry. So just that knowledge of how to get through the volume, assuming there is an increase in the defaults, to be able to get through the client's volume, which they definitely need. They have their timelines that they need to adhere to, whether they're governmental or otherwise, but to not sacrifice the quality of the work. And I think that when you have so many people that have had so many years in the industry and kind of know the ins and outs, and they're not just doing one particular thing, they're really doing the full gamut, that's really what sets us apart.